Hello, everyone. I'm very excited to welcome you all to another promising edition of the Forex Morning Mastery. Of course, as we gradually prepare ourselves for the final trading day of the week. And of course, from experience, we know that days like this has its own psychological peculiarity as market participants who had enjoyed price movements in a particular direction during the course of the week may likely want to start taking some profits off the chart. And of course, we are going to be taking all of that into consideration while we review the current market dynamic across the assets we are monitoring. So for this week, we have been monitoring about four financial instruments, which includes the USOIL, the USDJPY, the GBPUSD, and of course the XAUUSD. And today we are going to be reviewing how well these assets have done, and of course see how to manage any existing positions, while we also look forward to what is going to be happening this week, sorry, today. So let's get right into the business, isn't it? Okay, so to start with, as always, we are going to be reviewing the US dollar market dynamic, where we want to have a quick picture of how the US dollar has been performing so far. And of course, this will be giving us the ripple effect of what will be happening across the assets we are monitoring. Of course, trading the Japanese yen, the pound sterling, the gold commodity, and of course the crude oil has a lot to do with the US dollar. And depending on what happens there will determine what is likely going to be happening on those assets. Now, this is the 4 hours time frame of the DXY, that is the US dollar index. And of course, remember we captured the character of price action since mid-September, which of course gave us a sign that the US dollar has been recovering in the last 2.5 months. And this further emphasized the uptrend scenario here after capturing this series of higher lows, giving us a couple of ascending trend lines to work with. And you know how we use our ascending trend lines in this community. As long as price remains above them, we'll continue to look out for patterns and structures that support buying ideas, right? Now let's zoom into the structure. I remember we had our key level for the week at the $99.50 level, just right here. And this week started somewhere around here. So price action closed last week somewhere around here. And of course, we were focusing on how the market is going to be reacting to this confluence where the $99.50 level and the resistance line of the descending channel merges. So one of the things we were looking forward to at the beginning of the week is the potential of sellers coming in, maybe respecting the trend line where continued selling pressure persists below the structure to give us selling ideas, or price breaking out of both the 99 and the trend line where continued buy pressure above the structure will give us buying ideas. And of course, look at what happened at the beginning of the week. We saw price find buy pressure above the structure, and price did move significantly back into that resistance line we marked out at the 100 $135 level, right? And this gave us a sign that was recovering further again. And the reasons behind this is quite simple. Earlier in the week, the Federal Reserve had been sounding very hawkish in their narrative, which continues to support the US dollar. And then on Wednesday, we saw the FOMC minute, which showed that several Fed officials were reluctant to cut interest rates, which further boosted expectations that rates may stay higher for longer. Now, since price came into the $100.35 zone, a level which has been a resistant line before, if we go to the beginning of this month, we saw how buyers found it difficult to break through that area. And since price came back into that structure again on Wednesday, we noticed that buyers were finding it difficult to break through again. And as a result of this, we saw the market enter a consolidation where price remained confined within the $100.35 level and the $100 mark to emphasize the prevailing uncertainty going into the final trading day of the week. And for me, when I see consolidations like this, especially after a huge movement into a particular direction, it's a sign that traders are waiting for fresh data before committing further. Now, if we look at the economic calendar, you'll see that going into today's trading session, we have from the United States, we have the S&P Global publication, which is coming up around 2:45 p.m. UTC. That's 3:45 p.m. local time. We also have the Michigan consumer expectations and consumer sentiment also coming up about 15 minutes after that event, which of course is a sign that key play is a sign that this may be what key players are waiting for to decide whether to hold on to the dollar or not. Now, if weak data or signs of rate cuts comes in, it could hurt the dollar at this juncture. And at the same time, if stronger than expected data comes in, it will keep the dollar supported. Now, additionally, global risk sentiment also matters a lot, right? A weaker global outlook tends to help the dollar as a safe haven. Now, the cost and flow of hedging also plays a part in this. Some investors are holding off major dollar moves because hedging costs are rising at the moment, which adds to the consolidation we are seeing right now. Now, going into today's trading session, the dollar is likely to drift within this tight range unless one of the key data releases or comment from Fed officials triggers a significant breakout. Now, we have some Fed officials who are also speaking today. We have Williams, we have Barr, we have Jefferson, we have Logan, all of which will be speaking between 12:30 p.m. and 2 p.m. UTC. Definitely everyone in the market will be looking forward to hear what they have to say, and whatever they have to say today could trigger a significant breakout. Is it to the upside or to the downside? Okay, so like I said, if data disappoints or suggests a loser Fed stance, we want to expect price to pull back into the trend line that was broken at the beginning of the week, which is looking likely at the moment. Last trading day of the week, whenever price moves in a particular direction, on final trading days, due to the uncertainty that will come in during the weekend, most players will want to take some profit ahead of the weekend, which will result in price retracing back into structure. And if we look at things from a technical standpoint, remember I shared this with you, that we had this resistant line here, right? We saw price broke out of that structure. And theoretically speaking, whenever price breaks out of a key structure like this, we expect price to come back at some point in time to retest it in an attempt to continue the uptrend move. So that's a theoretical expectation, right? But it's not all the time the market works this way. So we are only projecting the possibility of price coming back to retest structure, that's about 60 pips, or a breakout of that resistant line to trigger an uptrend move. So today, because it's the last day of the week, volume may thin a little bit and moves might be more about positioning than fundamentals. So we need to look for sharp moves, but also watch out for false breakout. So going into today's trading session, we have a range bound around the US dollar. Price continues to trade between the 100 and the 135. So a breakdown retest this area could signal a pullback down, reflecting that key players are taking profit of the market. Or if price does break out the $100.35 level, this could further confirm the strength of the buyers. Now, let's go into the market we are monitoring, right? So we have the US All Spot. So what do we have here again? So this is the US All Spot chart, the 4 hours time frame. We do have a descending channel here. I think I talked about this on Monday. I'm not going to be going into details on this one. I will just want us to have a fundamental understanding of what is going on in this market, and then look at the structure I am using to navigate the market. This structure will be telling me how the market are thinking at the moment, and that will definitely be what I will be using to navigate the market today. So scaling down into the 15 minutes time frame, it is quite clear that oil has been falling significantly, mainly because peace talks between Ukraine, the US, and Russia is likely leading to fruition, and this could lead to lifted sanctions and more global supply. And as a result, we begin to notice price of crude oil drop significantly. Then India has been cutting Russian imports, oil imports, which of course adds some short-term uncertainty into the market. But the overall sentiment still remains bearish as traders expect more barrels to hit the market, right? And if we also consider the fact that the dollar was strong during the first half of the week, um, oil may become very expensive to buy at this point. And you know, when it's stronger, the dollar is strong, and US crude oil being a US dollar denominated asset, it's likely going to weigh on price of oil. So today we expect oil to stay under pressure. That's how I expect it to be, unless geopolitical headlines um, flip the narrative suddenly. Now, on the 15 minutes time frame here, I was able to spot what looks like a reversal setup, actually, a falling wedge. And to confirm this reversal setup, we need price to break out, retest that structure, which is yet to happen. Though we saw the breakout happen, but it didn't look convincing at all, as we saw price go ahead to break down the lowest point. This was my lowest point at the time I was analyzing this market. That was about an hour ago, and I felt if price drops below the structure, I will be willing to sell again. So with this I have here, right at the edge of this reversal setup, I do have a range bound structure, and this is what I will be using to navigate the market today. And if you're willing to be part of this journey with me on the US crude oil, I'm looking to either buy the breakout of the $58.25 level if that happens, or sell the breakdown of the range bound, which I already done. So if you look at the bottom of your screen, you'll see that my sell position on US oil is already triggered and running at this point. So I'm looking to see, for those who are yet to join this move, let's see if the market will come back, retest the structure, where continued selling pressure will further confirm the downtrend move. So that is what I'm looking at on the US crude oil. A very simple setup. Let's see how the market will play out on this one. Now, let's move on to the next asset on my watch list. If you have questions, feel free to drop them in the comment section. I'll keep on checking the comment section from time to time. Now, the next asset on my watch list is the GBPUSD. That is the pound sterling against the US dollar, right? And let me show you what the structure was looking like on the 4 hours time frame. At the beginning of the week, we had a range bound structure, and of course we had our key level at the 1.31, area, right? And of course, the market has been on a strong downtrend for over 2 to 3 months now, and this is further confirmed with the descending trend line. You see, in fact, I have a couple of them which further emphasize the strength of the US dollar. Now, in the last couple of weeks, the market has been oscillating around this key level at the 1.3100 level, as you can see here. This level here had served as a resistant line at some point, and of course, as a support line at some point. Now, during the midweek, we saw price break down the structure as sellers took over the market um, because strong US job data that we saw during the midweek killed expectations for a December Fed rate cut. Now, traders waited for the UK retail sales data this morning to see whether they will continue to sell. And look at what happened from the UK this morning. We saw the retail sales that come in at 1.2%, 0.2%, way below market expectation, way below the previous month data. In fact, the month on month was very woeful. The actual figure came in at minus 1.1, which is not a very convincing report from the UK. Then we're also looking at the S&P Global publication, which is coming up in about an hour from now. So traders are waiting for this data, which are expected to be weak based on what I'm seeing, and could put more pressure on the pound sterling. And for me at this juncture, the path of least resistance for the pound appears to be to the downside, right? As price continues to trade below this key level we mapped out here. And like we said, the US PMI, the consumer sentiment is also coming up later today, whether the dollar will continue to dominate or we expect a choppy market scenario. So for me to navigate this market today, I have a simple setup here on the 15 minutes time frame, and this is what I am looking at. So we can see in the last 24 hours, the market has been on an ascending trend, right? We have higher lows here, and we have a couple of ascending trend lines to buttress that fact. And for those of us who still have a sell position running on the GBPUSD, I will encourage you to move all stop losses, secure some profits. So I'm going to be doing the same right now. I'm moving my stop losses right above this point as buy pressure is observed at this particular moment. So what I'm looking at here is this. I already have another sell position this morning after citing that sellers are getting stronger, and I was looking at selling the breakdown retest, which actually happened. I got the position triggered. Currently is running in a small loss. Hopefully it comes back into that direction. But if it doesn't and I get taken out of that position, well, I'm looking to buy the breakout of the 1.30975. So let's see what will happen from this particular point. Will price break out the structure? Well, time will tell. It's looking as if it will, especially after looking at the character of the last candles here, the last 4, 5, 6 candles. We have sharp rejection here, a couple of armor candles, which further, and then look at this last one here, very big engulfing candle, which tells us that buyers are really, really trying to take some move out of this particular trade. And remember, the market has been selling since the beginning of the week. So this could be some sort of profit-taking activity ahead of the weekend. So we're only looking to buy if price breaks out of the 1.30975 level. Okay. So if you are yet to sell, looking to sell below the USDJPY, right? So on the USD JPY, we have been buying the USDJPY since the beginning of the week, right? I had a couple of buy positions earlier, and what's happening here? Okay, I had a buy position earlier, and oh, I had two buy positions. No wonder. Oh goodness me! I had two buy positions. I only moved stop loss on only one instead of two. Now I've missed. Oh my goodness. So it's okay. I've just adjusted my stop loss on the buy position right now as sellers begin to gain traction, uh, um, as we can see here. Now, the selling movement, the bearish movement we're noticing in the last 24 hours is attributed to the strong narrative Japan put out this morning, and it has been going on behind the scenes that there will be possible intervention to stop further weakness of the Japanese yen. Now, this has limited the upside as rising fear of intervention um, um, trickles into the market. And besides that, rising the fears of rising government debt and delayed rate hike also another factor in this one. And if we scale down into the 15 minutes time frame, you'll see things more clearly. This was the setup I had on the 15 minutes time frame. A beautiful descending trend line, right? A beautiful, sorry, descending channel. And then I had this old range. Wow, why did I use 0.1? Okay, the sell triggered below the 157.150, the 157.150, and it's doing very well at the moment. And it's doing very well at the moment, and it's likely going to continue. So if you are taking advantage of this, one, you want to be moving your stop losses, securing some profit at the moment while we continue to monitor price action here. Now, for those of you who are yet to capitalize on any move here, looking at the 156.600 area, this level here, you might be looking to sell below this point. So if price breaks down, retest here, we want to sell. Now, the reason why I'm saying I want to sell here is this. When price got into the 156.1, about an hour ago, we saw sharp rejection. We saw buyers come in. In fact, two candles shows that buyers were trying to respect that level. And if we zoom out and look at the nature of this, you'll see that price is at the support line of a descending channel. Let me extend this one so we can see. So look at it. We have a descending channel, and this is the support line of the descending channel, which lines up exactly with the 156.100. Now, if price can break down, retest this trend, this support line, it will further support a downtrend continuation. So I'm looking to add more sell if price breaks down, retest the 156.100 area. So that is what I'm looking at here to maximize my profit on this one. Now, if I'm considering to buy the USDJPY, I would rather want to see price take out the resistant line of the descending channel, where the 157.30 level will be a suitable spot to consider buying this asset. But in the meantime, it's looking very strong to the downside. I'll further look out for more opportunities to sell here, and I would love to show you something on the 4 hours time frame. Hold on a second. That's the structure we marked out at the beginning of the week. So remember, this was a structure we were looking at the beginning of the week. We had a beautiful ascending trend line. So if I extend that trend line a little bit, you'll see this was where price started this week, somewhere here. This was where price started this week, and then it went all the way up. We were lucky enough to be part of that move, and it appears price wants to go through a retracement, maybe back into the trend line, and we may be seeing another wave of bullish momentum start from here again next week, or a breakdown retest of the trend line to incite a move to the downside. So it appears this whole move will go down into this trend line. Let's see how far that is going to go. So I do hope I made myself very clear here on the USDJPY. This is the setup I'm using to navigate the market today. And like I said, we want to see price breakdown, not just breakdown. We want to see comeback retest structure to confirm and then join a move to the downside. All right. I hope that is very clear. So with that said here, if you have questions, drop them in the comment section. I keep looking at the comment section to see if there are any questions whatsoever. So moving on to my final assets on the watch list for this week, and that is the XAU USD, popularly known as the gold spot. And this was the structure. Hold on a second, please. I'm sorry, I thought I had a sound and I was trying to confirm. Okay, so look at what we have here on the XAUUS. This was the structure we were using at the beginning of the week, right? We had an ascending trend line, sorry, and we were looking to buy the XAUUSD, of course. And where were we at the beginning of this week? We were somewhere around here. I had a couple of losses on the gold. At the same time, I had a buy successful buy position at during the Wednesday trading session, though not enough for me to recover the losses I incurred at the beginning of the week. And if you look at this market, the market is looking very, very choppy. As you will see, around the 4,050 level, the market continues to consolidate throughout the week, emphasizing the prevailing uncertainty going into the weekend. And while the market is consolidating, gold appears to be finding lower highs and lower lows within that range. And this is mainly because was further supported, that is, the bearish was further supported by the strong US NFP data that we saw yesterday, and this reduced the expectation of a December Fed rate cut, boosting the dollar at the same time and pushing money out of the gold market. At the same time, global uncertainty and weak equities are also preventing a deeper sell-off. So in as much as the dollar is strong, um, the global uncertainty and weak equities are also preventing the gold from dropping further to the downside. And this is further seen with this whole support zone around the $4,050 level. Just this morning we saw price break down that structure, and we are not sure if this breakdown is a true breakdown or a false breakdown. So we need to be very, very careful here. Now, the market is stuck between a stronger dollar and a lingering potential. Now, I'm of the opinion that traders may be waiting for the PMI data today and consumer sentiment numbers to guide the next move. So I expect gold to stay pressured but supported on the dips unless the US dollar rallies again. Now, to navigate this market today, I have structures as always on my 15 minutes time frame. And ooh, I missed this. I missed this. I missed this. Look at that. Price just broke out of that structure. Can I buy right now? I think I can afford to do that. Let me just place a buy right now, and I'm going to wide range of stop loss on this one. Okay, so I just placed a buy on the gold, and I will explain to you why I have done so. Okay, so this was the structure I was looking at this after enjoying that bullish move. Remember, this was the structure we had here So we were able to take this move on Wednesday all the way up about 200, 300 pips. And then since that's testing of the 4,133 on Wednesday, finding lower highs in the process. So we have lower highs, right? Lower highs, as you can see, which is what they have been doing all through the week. However, we saw a breakdown this morning, a successful, what we like successful breakout, but after some choppy movement, price is back up, turning this whole breakdown into a false narrative. Will it be? Well, time will tell. So my structure this morning is to buy the breakout of the 4,000, the retest of the 4,040, and that is basically why I placed a buy when I saw this. Hopefully, the market will a buy when I saw this. Hopefully, the market will continue to move. And one thing I would like us to understand is that this market may continue to be range bound into next week. So if you are buying the gold and price moves significantly in your favor, maybe like 40 pips, you want to be moving your stop losses and secure some profit. Okay. Now, if I want to sell, I'm not going to be selling anywhere here unless I see a breakdown of the 4,025 level. So I'm going to be shifting my selling perspective into the 4,025 zone. So I will not sell unless price breaks down, retest the 4,025 level. Just there, this is the lowest point. Look at the character of the candles. We have hammer candles here, sharp buyers and strong from this area. So I would like to see price take out all the buy position, retest structure, gain some liquidity. Before I'm looking at on the XAUUSD for today, and it's on this note I would like to call it a day on the Forex Morning Mastery. It has been a great moment with you guys. I'm rushing somewhere, so that is why I just keep running through all of this. Hopefully, we get something out of the market today. Let's mark out the structures accordingly and let's use them to help us navigate the market today. So, patience is key, and let's watch how the market evolve around our structures. And always remember, every decision we make is an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined. So till we meet again next week, Monday, trade smart, trade consciously, and of course, do have a wonderful and beautiful weekend. Bye.